The markets experienced widespread losses last week, as only the emerging markets managed to close higher. This looked like a mirror image of the prior week, when emerging markets was the only one of the major markets to close lower. For what may be a bit of frustration to many investors, there was no singular aspect to highlight to attribute the losses across the equity markets. What was clear was that no style box escaped the impact, as the S&P 500 was one of the better performers across the various capitalizations. The Small Cap 600 Value Index, the best performer year-to-date across the style boxes, took a nearly 5% hit last week, softening its earlier gains. One positive note was that while the equity markets fell last week, the bond market responded somewhat inversely. The 10-year Treasury fell 6 basis points from the prior week, and the overall Treasury curve trended lower. This helped bonds to perform positively, as the Bloomberg Barclays U.S. Aggregate Bond Index climbed back 24 basis points to sit with a year-to-date loss of now less than a percentage point. If nothing else, last week serves as a cooling-off week for the equity markets, which had just come off a string of all-time highs in many indices. Meanwhile, inflation concerns continue to mount. One area where this has become evident is in the housing market. Fannie Mae recently updated their Home Purchase Sentiment Index, which showed a remarkable divergence in their good time to buy relative to good time to sell. Low interest rates and a limited supply of housing have added to this divergence, in which the underlying good time to buy and good time to sell set record positive and negative readings. That said, Doug Duncan, the Fannie Mae Senior Vice President and Chief Economist, said that, despite the pessimism in home buying conditions, we expect demand for housing to persist at an elevated level through the rest of the year. Mortgage rates remain not too far from their historical lows, and consumers are expressing even greater confidence about their household income and job situation, compared to this time last year when the pandemic had shut down wide swaths of the economy.